All right, let's get straight to it. What exactly is seller financing, and why is everyone suddenly talking about it? If you've been browsing property listings or chatting with real estate agents lately, you've probably heard the term pop up more and more. But what does it really mean, and why is it becoming such a hot topic, especially in places where the property market is booming? If you're looking to buy property, especially somewhere popular like Pattaya, but banks aren't exactly rolling out the red carpet for you, seller financing could be your secret weapon. Maybe you're an expat, a freelancer, or just someone who doesn't fit the traditional bank mold. Or perhaps you want to move quickly and avoid the endless paperwork and waiting that comes with a typical mortgage. Seller financing opens up a whole new world of the possibilities for buyers who want more control and flexibility. Here's how it works, step by step, so you can see if it's the right fit for you. Instead of borrowing money from a bank to buy a property, you make payments directly to the seller. It's a private agreement between you and the person selling the home, cutting out the middleman and all the red tape that usually comes with a traditional loan. The seller acts as the lender. They set the terms and you both agree on how the payments will work. This can make the process much more personal and tailored to your unique situation. Yep, you heard that right. The person selling you the property basically becomes your bank. They're the one you'll be making payments to, and they're the one who decides if you're a good fit, not some faceless loan officer. Now, why would anyone do this? What's in it for both sides? Let's break it down. Well, for buyers, it's a game changer, especially if you've got less than perfect credit, you're self-employed, or you just want to avoid all the paperwork banks throw at you. Maybe you're new to the country and don't have a long credit history, or you want to move fast before someone else snaps up your dream home. Seller financing can make all of that possible. Seller financing tends to be faster, more flexible, and sometimes even cheaper up front. You might be able to negotiate a lower down payment or set up a payment schedule that works better for your budget. Plus, you can often close the deal in days or weeks, not months. Let's break down how it usually happens, so you know what to expect if you go down this path. You and the seller agree on the price, the down payment, the interest rate, and how long you'll take to pay it off. It's all negotiable. Unlike a bank loan where the terms are set in stone, you and the seller can get creative and find a solution that works for both of you. Usually you'll sign a promissory note, a fancy way of saying an IOU, with all the terms spelled out. This document protects both sides and makes sure everyone knows exactly what's expected. You might be thinking, sounds too good to be true. What's the catch? Well, like any deal, there are pros and cons you need to weigh carefully. First, not every seller is up for this. Some just want the cash and to move on. Seller financing works best when the seller owns the property outright and is willing to wait for their money over time. And you'll usually pay a higher interest rate than with a bank loan. That's the trade-off for the flexibility and speed you get. Sometimes the rate can be negotiated, but expect it to be a bit higher than what you'd see at a traditional lender. Plus, if you miss payments, the seller can take the property back, so you've got to stay on top of things. Defaulting on a seller finance deal can mean losing your home and any money you've already paid, so it's crucial to be realistic about your finances. For sellers, it's not a bad deal either. They get to sell their property, often faster than through traditional means, and can earn extra income from the interest you pay. They might sell their property faster, get a steady income from your monthly payments, and even earn more through interest. For some sellers, especially those who don't need all the cash right away, this can be a win-win, but they do take on some risk. If you default, they have to go through the hassle of getting the property back. This can mean legal fees, lost time, and the headache of reselling the property, so it's not for everyone. So is seller financing right for you? It really depends on your situation, your goals, and your comfort level with negotiating and managing your own deal. If you're struggling with bank loans, want flexible terms, or just love negotiating, it's worth considering. It can be a powerful tool for buyers who want to think outside the box and take control of their property purchase. But always get advice from a legal or financial expert before you sign anything. Every deal is different, and you want to make sure you're protected and fully understand the risks and rewards. That's seller financing in a nutshell. Simple, flexible, and sometimes the key to unlocking your property dreams. It's not for everyone, but for the right buyer and seller, it can be a fantastic solution that benefits both sides. Curious how this might work for you in Pattaya? Do your homework, ask questions, and you might just find your perfect deal. Remember, the more you know, the better prepared you'll be to make a smart move in the property market.